All right. Happy Monday, everybody. Good morning, all you magnificent melon heads. I hope you guys are well. Today is September 18th, 2023, and WTF just happened in the bond market. Had a text from my moderator, Mish, last night. I'm telling you guys, every channel needs a Mish. That man is Johnny on the spot. When something in the world happens, he sniffs it out right away. He sent me a text message last night. Mish, I hope you don't mind. I'm going to violate text message confidence here. Here's what I got from Mish last night in the middle of the night, 11:48 p.m. Huge U.S. bond transient over last 4 hours. Nuts. When you get a message like that from Mish near midnight, something's up. I was out cold. Didn't catch the message till I woke up this morning. But I woke up and I looked, and wow, something. I can't tell you exactly what happened. Nobody knows exactly what happened. I can tell you the conditions that would cause something like this, but nobody knows. The 2-year U.S. Treasury yield spiked by about 47 basis points last night. Almost a full 0.5% like that, instantly. Now, if you guys don't live in the finance space regular, that may sound like, okay, 0.5%, what? That's huge. All right, the 2-year U.S. Treasury, along with the 10-year, which also spiked last night, these are the most liquid, most heavily traded assets in the world. The price of these things is not supposed to move. Not like that, it's not. Right? When something is very heavily traded, very liquid, it only moves in little bitty increments because at any given time, there's so many buyers and there's so many sellers. That's not what happened last night. Last night, the yield on the 2-year Treasury spiked by 47 basis points. Now, remember, yields and prices are inversely correlated, which means the price of the 2-year U.S. Treasury bond crashed in an instant last night, sending the yields vertical. The only other time I'm familiar with that happening was right around this same time in 2019. Repo madness, something I talked about in my live stream on Friday. I got a lot of feedback from the live stream on Friday. A couple people didn't like the length of it. It was like an hour and 20 minutes. There was a lot of information I crammed into that Friday live stream. But I was talking about this very thing happening in that hour and 20-minute live stream on Friday, about how in September 17th of 2019, how there was more demand for money than there was money and interest rates spiked vertical. Now, that's not exactly what happened last night because this wasn't in the repo market, at least not to my knowledge. It happened in the 2-year Treasury. Somebody sold a whole bunch of 2-year Treasury yields last night, and there weren't enough buyers to buy them. And so the price sank dramatically. And when the dust settles from this, when we finally find out what happened, I'm willing to bet we're going to find out that the Federal Reserve stepped in and bought it. All right, I would bet good money that that's what happened. I don't know that. I'm speculating now. All right, so I'm going to be careful to let you guys know when I'm speculating and when I'm saying something factual, but something very important, very big happened last night. It was not a glitch. All right. I think if it was a glitch, we would have heard glitch by now. I'm seeing glitches being spoken, thrown around a lot on FinTwit right now. If it was a glitch, it would have gone up and it would have come back down instantly. It didn't do that. It went up and it stayed up for several hours, which means somebody sold so much that it took a while for whoever came in and eventually bought it back down. My guess is the Fed. It took them hours to get it under control. And guys, it is radio silence from the financial press on this issue this morning, at least as of 9 a.m. when I went live. Nobody's talking about it. And to me, that's almost scary, the fact that Bloomberg, CNBC, Wall Street Journal, Barron's, none of them are talking about it. You know why that scares me? I'll tell you why I'm worried about that, because they won't go to press without a quote from somebody at the Treasury Department or somebody at the Fed. All right, they'll sit there in a holding pattern until they get a soundbite from some official. So the fact that this thing that started last night around midnight, all right, I mean, it was 9 hours ago now, plenty of time to get a quote. And it's not like, oh, everybody's sleeping. These are round-the-clock staffed. You know, they have crisis centers. Trust me, somebody was available to get a quote. The press can't get a quote. And so I'm speculating here. The press is not reporting anything because they can't get a quote. Why won't they get a quote? Because the Fed and the Treasury, again, I'm speculating here, they're getting their messaging right. They're in some kind of a crisis meeting trying to figure out what just happened and what they're going to tell people. How are they going to assure everybody that our banks are strong and resilient and well capitalized? Nothing in the financial press, guys. All they're talking to UAW strike, climate change, all whatever daily crap they typically talk about in the financial press. No mention that, hey, the most liquid financial asset in the world crashed very suddenly last night. All right, and that is hands far and away the most important story in finance right now. Nothing compares to it. All right, and there is nothing in the mainstream financial press. And if there's one thing I have learned in the last few weeks, especially with this NVIDIA CoreWeave story, the financial press is not there to inform you. All right, the financial press is there to give you the messaging that they, with a capital T, want you to have. And they are still getting their messaging straight. And that's why you have heard nothing from the financial press yet. Even though everybody can see it in the charts, everybody saw it happen, nobody's talking about it. Let's shrink my big melon of a head, guys, and go through the markets this morning. And while we're shrinking my melon of a head, remember, guys, it's very important that you like this live stream. I'm sorry, my mind is moving a million miles an hour here. It's very important you hit that like button. If you're new to the channel, please subscribe. We do this every morning. I'd love to see you tomorrow. But also, guys, very important, share these videos. If you see something important and you think this is, if you like the message that's in the stream in the morning, then share this on other platforms. Put it on your Facebook, put it on Twitter, because it really does help me out. The algorithms will not put out this content unless you guys help to spread the word. And I think this message is important. And right now, nobody is going to get this message from the mainstream press. So use that share button while you're at it also. Fear Greed Index this morning, guys, sitting right at 52 in neutral territory. Not a lot of movement there. Stocks are heading lower, but could be a lot worse, all things considered. Right around, right before 8 a.m. this morning, that's Eastern time, things were heading south in a big way. There's a little bit of dip buying going on, but the S&P 500 only down 5 points pre-market right now. The Dow is down 14 points pre-market, or just 0.04%. NASDAQ, though, a little bit more of a move. We got 0.25% lower pre-market on the NASDAQ. That's down about 39 points. We also had some things happening in Taiwan yesterday. The Chinese military was very active. We'll talk a little bit more about that. That may be spooking the NASDAQ, or all these stories could be related. We'll talk a little bit about that in a second. Looking over at commodities right now, gold is down modestly 35 cents this morning. December gold futures trading at $19.45, essentially unchanged. December silver futures at $23.38. That's down about a penny. Again, unchanged here. Platinum and palladium pretty much flat. We've got platinums up about 0.8%, $937 on October platinum futures. Crude oil's up another buck. West Texas Intermediate November futures trading at 91.03. That's up another 1.12%. Check out this oil chart, guys. This is going back to about October of last year. Man, this thing is just marching higher, keeps going higher. One thing, we have had now 1, 2, 3, 4, 5, 7 green candles in a row on the oil chart. And check out the relative strength index here. We are almost 80 on the RSI. That's on daily candles for oil. So oil is due for a pullback here, guys. I don't know how severe and how big, but it's definitely due for a pullback. I will be looking for an opportunity to go long oil stocks if and when that pullback happens. Although with a liquidity event happening in the bond market, be careful with what you're doing right now, guys, because there could be a scramble for dollars in the near future. That being said, we do not have a scramble for dollars going on at this very moment. The DXY is up 3 basis points this morning, 105.35. Not a very big move in the Dixie, especially considering that big spike in interest rates last night. So I would have expected to see a move in the DXY to accompany that big spike in the bond market. Didn't get that. So that's noteworthy this morning. And also, after that spike yesterday, yields are not really moving today. You know, we've got the 30 years up 2.5 basis points. Okay, it's higher, and this is making a recent high at 4.43%. But most of that spike has been given back. The 10-year, 4.35 right now. That's up 3.5 basis points. Again, this is a recent high. We haven't been this high in a long time, years. But it spiked a lot more than that last night. The 2 years at 5.07. That's up 4.5 basis points. and the 1 month at 5.398, basically unchanged. But this is what we're talking about here, guys. Look at this in the middle of the night. Let me zoom out a little bit so it centers. This is not supposed to happen in the 2-year Treasury yield. All right, we're humming along here. The 2-year yield, it bounces up at 5.04, 5.02, 5.03. Right, we're just moving along. And then last night, it happened right around, what's that, about 10 p.m. it started. No, I'm sorry, about 8 p.m. Eastern time, 8:30 Eastern time yesterday. Look at this, how sudden this is. Wham! Straight up in the 2-year Treasury. And guys, these are 1 minute. This isn't on a candle, but these are 1 minute data points here. So this happened, this spike from 5.036 to as high as 5.491. All right. Almost 50 basis point spike happened in under 60 seconds. Somebody put in a big sell order. Someone sold a lot of 2-year Treasuries, and the number of people who have enough bonds to do this is very limited. So, we're talking big banks, the Federal Reserve, China, Japan, maybe Belgium owns a lot of U.S. Treasuries. The number of people who could have made a move like this in the bond market last night is very few. So I think we're going to find out who it was. What a spike. Look at this. Instantly, almost 50 basis points. Comes right back down about halfway. I suspect that was the plunge protection team stepping in to buy up these assets. I think when the dust settles, we're going to find out the Fed was buying last night to counter this. I don't know that for a fact. That's me speculating. Stayed there for about 2 or 3 hours. Actually, almost 4 hours it stayed there. And then they bought it right back down, essentially to where it was. It settled a little bit higher. But guys, this is not normal price action in the bond market. This is volatility in the bond market. And volatility is the hallmark of an illiquid market, something I spent an hour and 20 minutes talking about on Friday in my live stream. Right? This is an illiquid market. Now, there was a lot of things were contributing to this, to the conditions. We had quadruple witching happened on Friday. Quadruple witching is the simultaneous expiration of index options, index futures, stock options, and stock futures. Right? All 4 expired on Friday afternoon. So when you get quadruple witching, which happens 4 times a year, you tend to get a lot of demand for liquidity on those days. Remember, Repo Madness happened September 17th of 2008, 2019. Lehman Brothers failed September 15th of 2008. You tend to get these liquidity events on quad witching days because those are the days where you have the most demand for liquidity. You also have today is a bank holiday in Japan. It's Respect for the Aged Day in Japan. Respect for your elders day. I'm not sure how it translates, but it's a holiday in Japan. So Japanese markets were closed last night. So you had a very interesting market dynamic last night where there was a lot of demand for cash because of the quad witching on Friday, and you had the 3rd biggest economy in the world was shut down. So if you were trying to cause a problem in the bond market yesterday, or if your goal was to cause a problem in the bond market, then last night was probably the perfect time to do it. With Japan closed and the U.S. coming off quad witching. I'm not trying to get tinfoil hatty here. Okay, here we go. Yeah, they're doing it on purpose. It's a conspiracy. No, that's not what I'm trying to do here. I'm just trying to come up with some possible explanations, some possible rationale for what might be happening. And there were some other things happening in the world yesterday that could contribute. But we saw something similar in the 10-year. Not nearly as big a move in the 10-year, but the 10-year is even more liquid than the 2-year, so you shouldn't see this. The 10-year, right at the same time, it spiked from about, 4.33, and it spiked all the way up to 4.39. Now, that's a much smaller move than the almost 50 basis points in the 2-year, but the 10 was also moving, and the 10 grinded higher for a couple of hours before, again, being bought right back down and settling a little bit higher than it was before. And again, I think when the dust settles, we're going to find that the Fed came in and bought this stuff up to correct this glitch. It's like, we fixed the glitch. Stepped in and bought it. Now, look, guys, this is Bloomberg this morning. When you have a big move in the bond market like that, that is the biggest story in finance. And look at Bloomberg. How auto executives misread the UAW, the carry trade, Instacart, Iran prisoner exchange, banks kicked $2.9 billion bond sale for WorldPlay. Guys, nothing about this in Bloomberg. All right, let's look at CNBC. What do we have? S&P futures inch lower. Wall Street awaits Fed. Oh, Hunter Biden, great. Tencent, awesome. Nothing in CNBC. And CNBC a few minutes ago, they had this 5 things you need to know this morning before the bell rings. Nothing about what happened in the bond market. CNBC is telling you there's 5 things you need to know today, and 5 of them are all these stupid, petty stories in the world of finance, ignoring what happened in the bond market last night. Everybody's just waiting. They need a soundbite from Yellen. They need something from Powell before they can tell you anything. Wall Street Journal, nothing. Check out Wall Street Journal. Soft landing could prove elusive. You might be paying too much for that index fund. The housing crisis in China. Nothing about what happened in the bond market. Barron's, nothing. The Fed this year doesn't matter, but rate cuts do. Ford and GM stocks waver. Nothing about the bond market. The radio silence from the press is worrying me almost as much as the event itself. The fact that the press won't say anything about it, maybe they're giving their guys time to sell what they want to sell, or maybe it just means the crisis meeting at the Treasury or the crisis meeting at the Fed isn't over yet, or the banks are coordinating their messages. You know, the puppet masters at the financial press have not given the all clear to tell us what just happened. And so luckily for you guys, you're getting your news from a Twitter rando. Shout out to Stacey Raskin. Luckily for you guys, somebody on Twitter is willing to talk about it. FinTwit is talking about it. I mean, I see a couple of the big accounts that I follow on Twitter. They're talking about what's going on in the bond market. Nothing from Barron's, nothing from Wall Street Journal, nothing from Bloomberg, nothing from CNBC. All of these trusted names in finance are not saying anything about what just happened. Also, last night, now I don't know if this is at all related, all right, and I have nothing to suggest this might be related. This is just something that correlated to what happened. And remember, I mentioned that there's a limited number of people who own enough U.S. Treasuries to make a move like that in the U.S. Treasury market. Well, one of them is China. All right, China still owns about $800 billion worth of U.S. Treasuries. I just want to mention a couple of China-related things that happened yesterday, because last night, Taiwan detected 103 Chinese warplanes around the island. Now, this has happened before, but this is a big one, right? Chinese incursions testing Taiwanese air defenses. This happens all the time. But this is a big one with 100 planes. Think about the cost of fueling up and scrambling 100 planes, you know, even if it's just to mess with the Taiwanese. They spent a lot of money to do this. They put a lot of people at risk to do this. Taiwan told China on Monday to stop its destructive unilateral actions after more than 100 Chinese warplanes and 9 Navy ships were detected in areas around the self-ruled island. Beijing claims Taiwan as its own territory to be seized one day and has ramped up diplomatic and military pressure on Taipei in recent years. In the 24 hours between the morning of September 17th and 18th, so while we were all sleeping, the Defense Ministry said it had detected a total of 103 Chinese planes, and it described the number as a recent high. In a statement, it said the sorties posed severe challenges to the security across the Taiwan Strait and in the region. Beijing's continued military harassment can easily lead to a sharp escalation in tensions and worsen regional security, the ministry said, as it called on China to immediately stop such destructive unilateral actions. Now, anytime issues are happening with China and Taiwan, you can bet tech stocks are going to react. So we saw Nvidia stock right now is down about 2.5% pre-market. Right, Taiwan, that's Taiwan Semiconductor, the biggest manufacturer of chips in the world. So 103 Chinese planes buzzing Taiwanese airspace. That's a big deal. Chip stocks don't like it. Looks like Nvidia's down $11 pre-market, trading at 427. We've got ARM Holdings is down almost 3%, down down $1.85. Taiwan Semiconductors down about 76 cents, or a little under 1%. So tech stocks are reacting. That's just something that correlated to this move in the bond market, was this sudden big military incursion. Now, no shots were fired. They were just buzzing Taiwanese airspace. But that's an interesting story. And we also got this one. China's central bank and Forex regulator meets with foreign financial institutions. This one just came out today, also happened this morning. The meeting is said to include Morgan Stanley, HSBC, Deutsche Bank, and also the likes of Tesla and BASF. So the Chinese central bank and the Chinese Forex regulator called this meeting last night of a lot of Western business interests in China. The PBOC is out with some comments noting that China will improve its policies and create a more market-oriented and international level business climate. I would look past the smoke and mirrors here, as the meeting seems to involve the Forex regulator for some reason. Also, there are plenty of things going on behind the scenes in China right now, not least after this report from last week. Now, this is from Justin Lowe at Forex Live, and they're calling out this report from last week where the PBOC, this is something I talked about in some of my recent live streams, talked about telling companies to hold off on their dollar purchases. Again, just an effort to shore up the failing yuan. So I wonder, is this related to this sudden meeting with the Chinese and Western business interests? Could it be related to all of these warplanes buzzing Taiwan? Could it be related to what happened in the bond market last night? These are just the big stories that I found when I woke up this morning. I don't know if there's any link between them. But guys, we're not getting any word from our press. Our press is not doing its job right now. And you know, when you see a chart like this and there's mum from the press, that is a big freaking deal, guys. I don't know what that was last night. I know what this was. This was a lot of sellers and not enough buying. Okay, that's simply put, that's what this was. Somebody sold a ton of 2-year treasuries last night and there was not enough people to buy them, and so the price went down very quickly. Now, who stepped in and bought? Did the Fed step in and buy? Who was selling? Was it China selling? Was it Japan selling? Probably not Japan. They're closed for a holiday. But if it was your goal to cause treasury prices to drop, then you did this perfectly. That's the thing. Whoever was selling, if they were just trying to raise cash, they did it wrong, because you don't sell all at once like this and crash the market. That's not how you make a controlled exit. That's not how you raise cash. If your goal, however, was to cause this transient in the bond market, then this was executed brilliantly, coming off of quad witching in the middle of the night while Americans were sleeping and while Japan was closed for a holiday. So interesting things happening in the bond market, guys. I don't know who caused it, what the reaction was, but the silence from the press is as big a story as this event itself. And I want to say thank you to JJ Watt, who said, I've noticed the paper to silver ratio has been slowly but steadily dropping on the national debt clock. Thoughts on this? There's a lot happening in the metals market, guys. Something is up again in China. The Chinese inventory on the Shanghai exchange, this big arbitrage opportunity. There's a big spike in the price of gold and silver in China versus the price of gold and silver on the COMEX or on the LBMA right now. China, for whatever reason, Chinese buyers are paying a premium. That either means that the Chinese are trying to flow metal from west to east, and there's plenty of good reasons to do that, or it means there's some powerful players in China who are naked short the metal and they're being forced to outbid their Western counterparts to cover their shorts. That could be happening. There's a lot happening in metals right now. I don't know what it is. But the one thing I'm going to warn you guys about, you metal traders out there, and look, I love the shiny. I love silver, right? This channel was born in the silver squeeze movement. If we're about to see a blowout higher in interest rates, if we're going to see bond yields spiking, if we're going to see the DXY spiking, that's not good for precious metals. All right. Now, precious metals in this environment with the DXY moving higher and with interest rates already moving higher, gold and silver are holding up magnificently. They're doing very well, all things considered. I would expect the price of these metals to be tanking on this news. It's not happening, though. Just be careful, guys. Interest rate risk and Forex play a major role in gold markets. You have to watch more than just the inventory at the COMEX. But honestly, I don't know what's causing this. I can't tell you, JJ Watt. I know this arbitrage opportunity between Shanghai and London, Shanghai and New York, it should be closing. It should be rapidly closed, because you can make money buying metal in New York and selling it into China right now. But it's not closing. And I'm sure people are buying in New York and selling into China, but it's not working. So I don't know what's going on there, but I think we have not heard the last of this story. Thank you very much, JJ. I appreciate the super chat, the support of the channel. And thank you, Mr. S. Henderson. I appreciate that, Henderson. Says, everything is fine. Nothing to see here. Yes, S. Henderson, who apparently is the stunt double for Officer Barbarati in South Park. Nothing to see here, guys. Just a glitch in the matrix. Ignore this nearly 50 basis point spike in the U.S. 2-year Treasury that happened while you were sleeping and Japan was on holiday. Ignore the fact that The Fed is not saying what's going on. The Treasury won't say what's going on. The press won't touch this with a 10-foot pole. No, they'd rather talk about Hunter. They'd rather talk about the UAW. Ignore this massive middle finger that the bond market just gave your portfolio. I'm sure everything is just fine. Yikes. Thank you very much, S. Henderson. I appreciate that, guys. All right, guys, that's all I got for you right now. If I find out more about what's going on in the bond market, I will bring it to you as soon as I have it. But right now, that's all I got. Too many sellers, not enough buyers, don't know who the main players are, and the press is radio silent. That should scare you guys. All right, everybody. I want to say thank you so much to my Patreon supporters for everything you guys do for the channel. Thank you so much for the super chats, JJ and Mr. Henderson. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.